All right, hey guys, it's Trevor here from Trade on Point. Would like to welcome you all to the webinar. Today's live trading, the 18th of August 2021. So just like to welcome those of you that are joining us through Click Meeting and of course on Facebook and YouTube. And we hope that we'll have a good trading session today. So straight away, we're just going to go through some of the important rules in relation to the trading room. Now, for those of you that are new or have just joined us for the first time, what I just want to go through is just the disclaimer. So, of course, the main thing is to remember that ultimately, Trade on Point is for educational or information purposes only. So, one of the things to remember is, as a trader, you've always got to remember that risk. So, if you just listen carefully, so trading currencies, stocks, futures, options, bonds, it does involve significant risk to traders or investors. You need to consult with your financial advisor and get independent advice on whether trading or investing is suitable for you. Given that futures and Forex are highly leveraged, this can result in substantial gains, but also substantial losses. And furthermore, because it's leveraged, you can lose more money than you actually put into your account. So just remember that Trade on Point is directors, employees, partners, affiliates, or agents. Any managed third-party accounts. We don't provide financial advice. We're not licensed for this purpose, and all our services are for informational, entertainment, or educational purposes only. So any content presented here today is for that purpose. So guys, just quickly, I'm going to short the, and again, this is not financial advice. This is showing you how I like to trade. But I am looking to short the NASDAQ at market. So just bear with me 1 second. I'm just trying to change accounts here. All right. Okay, so I'm short at market. I've been watching this trade set up as I've been watching the us leading to the European Open, and I would have liked to have actually got in at a slightly higher price, but I was just trying to get the room set up. But just going back, so just remember, any trades, including this trade that I've taken, we're not giving you advice to get in a trade. That's the last thing that we want. By all means, you can get on the demo account, have a look how we trade. But if you're trading live money, it's got to be your decision, right? We are not here just to call out trades and you take them and you either lose money or you make money. The purpose of Trade on Point, and always has been, is to teach you how to trade as opposed to just call trades. So you shouldn't make any trading decisions unless you understand the nature of the trades, and especially the risks involved, the exposure that you're exposing yourself to. And if you do, if you don't understand these, then please speak to your financial advisor or seek independent advice. So that's really important. But obviously, we don't want to scare you off. Trading for us has been quite profitable over the years. We've been trading, or I've been trading for about 20 years now. I've worked in the industry, and I still enjoy it today as much as I did 20 years ago. And you learn stuff over the years. So just in relation to this trade, so the entry was actually at about 4 points higher than I am now, but I'm fine with that. My stop loss is going to be at 17. Now, the reason for that is it's really just a technical trade. Now, we have had the Dow Jones sell off a little bit here, and we do see the Dow Jones is trying to put in a slight retracement, as you can see now. The Dow Jones is the MYM, those are the micro futures. And the reason that we trade in the micro futures is because we realize that most people don't have, an account where you can trade $50 a point on the S&P or $5 a point on the Dow Jones, and Dow Jones can move 1,000 or 2,000 points a day on a day when it dumps, or you can easily move an average range for the Dow Jones. Intraday range from the high to the low is normally about 300 to 500 points. Can get as high as 600 points. So you're trading a $3,000 risk at 600 points if you get it wrong. So that's why we prefer to show people using micro futures, because the risk exposure is a lot less. So at the moment, we can see, and I will explain to you, so stick around, especially if you have come and you're watching us stream live on YouTube, and I'll show you exactly why I get into these trades and how I manage my risk. What I'll do is we're just going to go through, we've got a few minutes before the market open. So one of the things I always like to go through in the morning is the news. And the first thing I'll do now, I'm just going to quickly put this chart onto another screen of mine, because I want to watch that like a hawk while I'm in a trade. Right, so this is Trade on Point. This is our website if you haven't seen it before. The website address is tradeonpoint.com. Now, you can find a lot of information on Trade on Point, including some education, trusted brokers, and information on our live trading room. So I won't spend too much time talking about this, because you can go to tradeonpoint.com and have a look for yourself. But what I want to take you to today is MetaTrader indicators. Now, MetaTrader indicators has a calendar. It's the third tab across. And what I do is I filter my news to only display medium and high impact. I can display low impact, but the issue is I don't really care about the GDP deflator on Japanese yen. You know, I don't really care about the house price index in China. With no disrespect to China, it's just not going to impact the news that much. So I leave it on medium and high. So what have I got coming up? There's not a lot coming up today on this calendar. We have got some high news coming out, and that'll be later on. Now, this is set to my local time, so the time now is 9 minutes to 8 London time. The next website that I go to is I go and double check Forex Factory. Now, if you go to Forex Factory, just click on calendar, and that'll come up. Now, everything in yellow is low impact, everything in orange is medium impact, and everything in red is high impact. Now, if I can just dock this window, I'm just going to see if I can make my window slightly smaller. There you go. Now, what we have got coming up later on, so you can see here we've got the news that has come out this week. We've got the expected result, or the forecast result, and then we've got the actual result. So you can see here we had consumer price index, which is CPI on the pound. That came out. It was worse than expected. Forecast was 2.3%, and it came in slightly lower than forecast. So that's not good for the market. And we have seen the market just grind lower today. We have got CPI coming out on the, and that's at 130. Now, that's on the, that will affect the Canadian dollar, but it will have an effect on the indexes, and especially the Dow Jones, the S&P, the NASDAQ, the Russell, you know, your American indexes. And then, of course, 7 p.m., which is later on, we've got the FOMC minutes. Now, this is high news. This is going to rip the market one way or another. And then tomorrow we've got the employment change and unemployment rate in Australia. So that again is going to affect the market. So the way that I do it is because I don't have to do it now because I'll be out of the room. But what I have is I just set on my telephone, I set a little reminder, and that reminder comes up and it tells me what's coming out. And in fact, there's an app called Traderly, I think it's called. I'll tell you exactly what the app is. Tradays, Tradays. It's an app. It's a free app for the iPhone, and that basically will give you all the news. And I think they get their data from Forex Factory. So it's a great website. It's free. Put it in your bookmarks, and certainly it'll come in useful. So we'll just get rid of that, and we'll have a look what our market's doing. So generally, if you haven't traded with us before, well, if you haven't watched us before, it's probably a better term to use. What you'll find is generally we will get a trade. We'll get a trade coming into the open, and sometimes it gets us from about 7 London time, anywhere between 7 London time and 8 London time, we potentially could get a trade, and then a lot of the time we will get a trade coming into London, and it depends on which way London's going to take it. So we've got another 6 minutes to go. We can see we kind of break even with our spread. This is on the NASDAQ, and if I get another position over here, so I haven't got an entry over here, unfortunately, but if I get an entry, so this could be a retracement, and then if I get an entry, if it comes up to my point of control or my high value area, and I get rejection from that, then what I'll do is I'll then play the market down to the downside. So I'll be shorting. In other words, I'll be shorting the YM in a nutshell. Now my target, what I do for my target is, let's have a look at what we're doing. Try and find a good target for this. $14,980. I think 30 points on the YM. On the MNQ. 14,796 is probably 14. Sorry, a bit dyslexic there. 14,976. So 14,976. 14,976 is actually 977. So that's kind of going to be, that's where I'm thinking at the moment. And you can see our risk to reward there is going to be quite phenomenal. So like for 5 minutes going into London, guys, we see this little rejection candle on the YM. Remember that this is displayed in points. So we 1/4 of a point in profit after our spread. Yeah, it looks pretty good. The 1 hour chart, I'd like to try and see a little bit better on that. What are we doing on the half an hour? $15 minutes time to roll. Just going through some of the other time frames. What we definitely don't want to do is we don't want to curve fit. We don't want to just, what curve fitting is you keep going through the charts until you can actually find one that looks like it's working for you. So clearly, it's like getting an indicator and saying, okay, well, I need a moving average, but I'll try the 20 and then 21 and 26 and then the 30 and the 50 and the 55, and eventually go, hey, look at that, the 42 moving average, the EMA or the HEMA or something like that, that fits my trade. So that must be going in my direction. So all I was doing there is I'm just looking at my longer time frame charts. So we do broadcast on Facebook and YouTube. One of the questions I've got at the moment is, what is the green and red background that I've got on my chart? So what this is basically every indicator is pretty much an algorithm. So in fact, if I pull up an indicator, for example, tools. just pull up one, for example. Okay, so you can see that's pretty much what an indicator looks like. Okay, so each of the, it's just an algorithm. And if you can read code, then great. If you don't worry, you can still become a profitable trader. But ultimately, the red and the green, so the way that the system works, or Dow Jones is just put in a potential sell, 1 minute to go. Oh, just watch this. You just got to watch. I'm just going to move my stuff up a little bit. I'm going to watch this trade very closely because we are going to have a slight little bit of volume coming in on we're starting to hit the offer. But sometimes what happens is you get that first candle, it pops up, and you get a lot of orders taken out. Shorts might come in, and then we might or depending on how this candle closes, which is in 2 minutes' time, depends on whether I stay in the trade or not. So this has got to print this has really got to be a rejection. When I say candle, it's interchangeable. I use a bar chart as opposed to a candlestick chart, just because I have my paint bar indicator. So we've gone from a little bit of a profit down to a couple points against us, but we do want to pretty much watch what this bar is going to do. So I really wanted to be a gravestone doji or something like that. So just in answer to that one question on our social media channel, each of these indicators is essentially an algorithm. So these ones here, some of them are, like we program, others we use, like the TAS boxes. That's a third-party indicator. I'd love to know what the code is behind this, and I've tried to work it out, but ultimately what we do is, indicators are great, and a lot of brokers will offer indicators, and the way that indicators work, it's about having the right combination of indicators that produce a constant result. That's what you're looking for as a trader. You're looking for I wish this bar would just close now. It's doing my heading. But you're looking for the right combination that used together will produce a constant result, and the result that you want is you want to be profitable, ultimately. So we can see so we had that little spike. We haven't broken the high of the open, so that I like. We can see the Dow Jones futures, this is the YM, so Dow Jones Micro Futures are trying to track lower. So that's good news for us with the trade on the NASDAQ. But again, right. I'm getting very close to my stop now. So if we don't print below the open over here, then I'm going to kill the trade. So it's either going to stop me out or I'll kill the trade. because we are now getting some what I'd say conflicting signals at the moment. We can see the Dow Jones. You can see it's these are only 3-minute charts, but we've got a nice range on the 3-minute chart. There's 21 points in the Dow Jones, so that's probably going to push it higher. But I am watching this like a hawk on our NASDAQ trade at the moment. So there are some questions coming in both on our social media, and we've got some coming through our Click meeting. I'll get to those in a second. Okay, looks like we may have been saved by a point or two, literally a point. Potentially this is going to, we've got the Dow Jones points in south. So the red and the green bar. So again, it's an algorithm, and so the way that the green and the red bars, without going into the algorithm, the green bars, if you get a green bar, it signals that the market's bullish. And if you get a red bar, the market is bearish. And if you get a purple bar, the market is going sideways. So so the way that it works is, and I'll go through, if you stick around, I'll go through the way that we actually take our trades in the room. So we're just got to be careful of this one, because we are getting, we're getting a conflicting signal. We haven't got a buy signal to go long, and that's kind of why I'm just holding out on this trade. But it's getting very close to our stop. We're only a point and 3/4 away. I think I'm going to kill this trade. Okay, I've just killed the trade there at -9 points. I'll just leave it because we are starting to get. If we look at the 80 trigger, the market's trying to head higher, and I'll just wait for the next short signal to come in, or alternatively, I'll take the market long. So we didn't save much there. We saved maybe a point or two by getting out early. There we go. We would have been stopped out in any event. So the way that it works is we end up what we try and do in the room is we look for how the market's reacting. So to have a look. What we've had is we've got the open over here. Market's not really doing anything. We get into a short position just before the open. Market opens. We have this spike higher. And then we're printing higher highs, higher lows, and then the market starts saying to us, okay, potentially we're going to go bullish again. The issue is then, do we stay in or do we stay out? Now, one of the reasons I decided I was going to stay in is because we get in this red bar here, and we get in this purple bar over here. So that's really indecision that we're dealing with at the moment. And then we've got the 80 trigger line that's not printing above the trigger line. The minute I had this one, that's where I got a bit nervous. When I say nervous, I thought, okay, this trade's not going to go in my direction. Once we started breaking the trigger line, and then we ended up canning the trade on this bar over here. So a lot of it's also about trade management as opposed to being right or wrong. If you're wrong, you want to manage your trade, and if you're right, you want to manage your trade. Because if you cannot do that, it doesn't matter how good your entries are, you're going to lose money. Or it's going to make your life an emotional roller coaster. So the way that I get into a trade is this particular strategy, which tends to be quite profitable for me, is I look at, for example, here we had 7 o'clock. I'm looking for a red background. I'm looking for a, I mean, this is a perfect trade here. It's a break below the TAS box, and it's a red bar. What that means for me is, I've got the perfect. I count them in points. I get a point for the red bar. I get a point for the TAS box break. I get a point for the background. I get a point for the AT trigger being above the trigger line, and I get a point for the CCI being below the 0 line. So that's a 5 out of 5 trade. Other trades that you'll get is like this, for example. We've got 1 being for the background. We've got nothing for the red bar. We've got nothing for the trigger line, and we've got a CCI that's just moving above the trigger line. So you can see we've only got 3 out of 5 on that one, and that's why that's why it wouldn't be a signal that we would take. When we look at, for example, here, you can have a look here. We've got the sell-off. We form a low. We go into indecision. That's the TAS box, and then over here we get a TAS box breakout. We get the background change green. We get the AT trigger going above the trigger line, and we got the CCI going above the 0 line. So again, that's a 5 out of 5 trade for us to go long. So we had a question, why don't I enter a trade now? I like to enter in the first 2 candles. If I don't get the trade in the first 2 candles, then the color that I want in the first 2 candles, then I just leave the trade, because there's no point. And of course, they're not all going to work out, but there's no point in trying to get into a trade just for the sake of being in a trade. I'm more inclined perhaps to take another short, and I'll just have a look. I'm just watching because I've got other time frames above me here. A short off this TAS box break over here, and see how we go. And that's exactly what I'm going to do. So I'm going to short again. This is not advice, guys. Don't take this as advice or trading signals. I'm just managing this trade. It's more of a scalp. So we came up here. We got rejection. We got resistance, clear resistance over here. We had the rejection candle over here, and I thought it's a real. I wouldn't say easy trade, but less risky trade. Now, let me just chase back to my 3-minute chart. And certainly we can put our resistance sitting up here. Remember, this is intraday resistance. The other reason I like this trade is I'm watching the Dow Jones as well. And you can see the Dow Jones, we are trying to break this trend line over here. And in fact, there's almost like a little triangle we winding into over here. So I do like this. I do like this break of the trend line. I'm watching the Dow Jones trying to grind it lower. Now, potentially I could jump into a trade on the Dow Jones as well. However, I'm already in on the NASDAQ because these are so closely correlated. There's no point in basically. I might as well just take 2 contracts on the NASDAQ. Although they do sometimes go a little bit different. They're not as correlated, for example, as the Dow Jones and the S&P, but they are quite correlated now. So I'm still liking this trade for now. I need my other glasses. It's amazing the opens that we're getting at the moment. I mean, a month ago, it would just rip into the open and, we'll do 20, 30 points on the Dow in no time. At the moment, I mean, look at this. We've got a range of 8 points, really about 12 points on the NASDAQ. That's not a lot. So it does sometimes become somewhat difficult when you're not establishing these ranges when the market's supposed to be volatile and it's not. But we can still see we're still trying to head lower on the Dow. We can just see these little areas that I'm watching over here as well. These little highs and highs. So we've got these 3 lower highs. So let me just. So the Dow's actually performing a lot better for us than the NASDAQ, but the Dow keeps selling off. If we can retest this low down here, which will be a significant run on the Dow, then we should at least pull back to this low over here on the NASDAQ. So my stop's basically just going to be above this resistance over here. I don't think I've put it in yet. So at the moment, I'm just sort of watching the market, watching this trade, because I'm seeing the Dow sell off. We're not doing much on the NASDAQ at the moment. We've dropped a couple of points. I'd like to see this drop. If we can get down to about 15.08, or we should be pinching towards the round number. Then we'll set our stop to break even. I don't want to go stop to break even with just 2 points, because we'll get a rally to retest this high and potentially get stopped out for break even. So we can see our Dow Jones certainly was the better trade with the retest of the TAS box. Had to break the TAS box, but that was about 7 o'clock. London Open, retest the TAS box. 64.27, almost 40 points. And 40 points on a mini contract, that would be the equivalent of $200. But we are struggling to try and edge low on the Nasdaq at the moment. What we're going to look at as well is we're going to look at some of the trades, some of the longer time frames, and I'll try and give you an indication of what I think the market. And again, you know, guys, not advice. Don't jump in just because I say something's going to happen. You can see on the last trade, I thought we were going to sell off. We didn't, but we trade the indicators. That's all we can do. We don't have a crystal ball. All right, so we'll just put that chart on another screen for now. We'll keep an eye on it, and we're just going to go through some of the longer setups that we have here. Now we still have a couple swing trades on. So I'm just going to start off with the Dow. I love trading the Dow. It's my favorite instrument to trade. And you know, I try and trade Forex, and I try and trade so many. You know, I can pretty much trade anything, but the Dow is like, you know, it's the two of us. We kind of speak the same language. When I look at the 60-minute chart, now I use the longer time frame charts just to give me an indication on, again, it's just the same type of thing. Guys, I'm just going to pull this chart up quickly. So I'm going to put my stop to break even. So we're currently up about 5 points on the Nasdaq, about 6.5 now. So I'm just going to set my stop to break even and leave it at that, because I can see my stops above. Yeah, I'm happy with it. But it gives me, that way I don't have to watch it and try and talk and watch another chart at the same time. So looking at the Dow Jones, you can see here, we've got, this is the US 30. So the US 30, the Dow Jones, the Dow 30, you know, CFD, you know, this is traded on the CFDs off the Dow Jones index. We trade the Dow Jones micro futures, which trade off the Dow Jones futures. But they're pretty much all going to correlate. You know, if the Dow Jones futures is going to fall, the index is going to fall. Whether you're trading CFDs, whether you're trading futures, you're still going to get the same movement. So over here you can see we've been grinding lower. This is the 60-minute chart or the 1-hour chart. So I'm just going to put this into the middle here so that we don't cover the screen, because I've become aware that my camera sits over the screen and does cause a problem. So you can see here, we almost had the head and shoulders, but it cancelled out. But we've had this double top, and we pointed that out the other day. That, you know, beautiful double top rejection over here. For those of you that don't see the double top, there it is over there. And the market's trying to grind lower there. We are testing the bottom of the low value area. So for a typical TAS box trade, we've got the high value area, which is this. Let's get rid of that. Let me get my what I want towards the arrow. That's Control F. So that's the high value area over there. And then we have the low value area, which is this green line here, and we can see we're testing that at the moment. So the yellow is the same as the purple on my entry chart. What it means is it means indecision. It means that, you know, the direction is neutral, is another way to put it. Currently up 7.5 points. So eventually what I'm expecting is I'm expecting the it to come below, close below the low value area. We're still below the Ichimoku cloud, and for those of you that don't know, the Ichimoku cloud is a great video by Troy. He's done an exceptional job at explaining in a really easy to understand, fun, graphical way the Ichimoku cloud. So go on to Trade on Point, go onto our YouTube channel, and I suggest you watch that video. It's certainly done a good job on that. So we are below the cloud. So I would expect, and again, not advice, but I would expect we've got some support and resistance areas over here. You know, we've got, if I can just draw them in the chart, certainly these are going to play out. And you can see here, they actually coincide with these green lines over here. So this is my support and my resistance areas that I'm looking for. But you can see I'm just drawing the lines and how they're actually formulated here. There's an algorithm behind that. They don't read paint. They are doing well. Guys, I'm just going to pull up this chart again. Currently up 10 points. We can see here, there's a TAS box break trade that we did. You know, a rejection off the high value area. We are printing low, currently up 11, 12 points. So we are now well in profit. And we've got our stop sitting right up there. So let's see. So yeah, it certainly is an area of support. We need to break below that. We've got the next support area is going to kind of be about here. And that might be a good target there as well. 14,995, another 5 points to go. So I think what we'll do is we'll put a buy limit in there. This is a day trading room, so let's not get over enthusiastic. We've already got 12 points, 13 points on the cards. So we'll leave our trade there to hopefully limit out. So as I was saying, so this is what I'm hoping that the market's going to do. Why am I hoping? Because obviously I'm short, and I make money if the market goes down. But that's kind of what I've got. I've got 31 minutes to the close of this candle. I'd like to see this candle underneath the low value area. So that's something to look out for. So your 1 hour charts, they're watched by everybody. You know, generally people always, if they're trading a 5 minute chart, 3 minute chart, they'll have a 15 or 1 hour chart as an anchor chart. The next chart I want to show you is, I just want to show you now, this is the 8 hour chart. And the reason I use the 8 hour chart is because I'm lazy, right? For no other reason. Because I don't want to, I like the 4 hour chart. The 4 hours is a lot more popular than the 8 hour chart. But, you know, a chart's a chart at the end of the day. And what you will find is, when you look at this, so again, if you have a look here, massive range, and I was talking about ranges just now, 35,472. Obviously, these are CFDs. Remember that they go off the index. So 472 down to 116. So you've got a over 400 point range. Sorry, 300 point range in 8 hours. I mean, that's huge. You can see this one here as well. A huge range. And so that's what I'm trying to say to you is, you've got to respect the ranges on here and trade what you can afford in your account. Don't go and trade minis when you've got $500 in your account, because you'll blow your account in no time. but the same thing. You can see that now. What this really says is, to me, is this is indecision, because we've got this high over here. I've done it again. Control F2. Because we've got this high over here, and then we've got this low over here. If you follow Gann theory, or you know anything about Gann theory, a trending chart is one that prints a higher high or higher low. Currently up 975, by the way, 9.75. And anything, this would be what is called an inside bar, an inside candle. So you can see here, and in fact, you know, you've got a slightly trending candle within an inside candle, but you've got 4 hours, 29 minutes to go. So, so respect. If you look at the 34,242, would be a nice area for this to break. 4.2, so 50 points away. So if you equate that onto 50 points on here, that's where your target can be. And if you have a look at where my target actually is, it's about 50 points away. So that's one of the things to follow. And again, we've rolled over. We're struggling to make higher highs. Maybe we get some Fed intervention. Guys are at 15.5 points. Very close to our target at the moment. So just keep an eye on the 8-hour chart. You can see here. I'll just bring our actual trade up. You can see here. It's always fun to watch yourself limit out if we limit out. Remember that this market. We've got 2 points to go. 1 point to go. Okay, I'll close it out there. So we got 16.5 points on that one. It came in within 1 point of our target. What a bugger. But we're still selling out. I mean, I probably expect this will probably go, and I'll kick myself just now. Like, I'd rather just take the profit. Like I said, it's a day trading room. There we go. Okay, we would have hit target. Anyway, jumped out a bit early, but that's fine. We still, obviously, we've got our swing trades on it, so that's important. And, you know, it's different unit trading room. Obviously, there's some little bit of pressure to get it right. So we have made a profit today. That's the main thing. You know, a profitable day is a good day as far as I'm concerned. You know, and there we can see we're still pumping lower. Let's just bring up the daily chart. If we have a look at the daily chart here, and this is what we were talking about yesterday. Now, this is for those of you that were in with us yesterday. You can see there's the high. That's yesterday's chart. We have this inside day, but at the moment we are looking to print lower. We're heading back towards this high value area, which is going to be, this is going to be where our, we're going to find a lot of support over here. And I think that's going to be the deciding factor. If we can get below this support, then we're going to go and retest these levels down here, which is a good, you know, 500 points away. So that's kind of my game plan at the moment. And on my swing trades, that's round about where my target is at the moment. If we also have a look over here, I was drawing up some fib levels the other day, and we've got this huge trend that's been going on. So this is obviously where we've printed. We had a little bit of a sell-off, and we get into the chart, and we're going to put in our Fibonacci retracements. And look at that, you know, we've got the 23% sitting right over there. So it's a long way off, and that, you know, the market needs to price in about a 15% retracement, but it's not, you know, and it's a matter of time. That was our box that we drew yesterday. That's what I was trying to say. In fact, I'll put it back on there. Is what I said to our traders is, if you draw a box, and I said my one should really be about there, I'm looking for the price to try and get back, if you give me a second, into this box. And if we can get into this box, there's a good shot we can go and retest the bottom of the box, because that's really the range. In fact, this should be up here. So that's really the range that we're going to get to now. So that's the daily chart. Looking at some of the other markets, the Aussies are performing pretty well at the moment as well. Let me just get my chart sorted out. So you can see here we're now well below our 14,990, our target. So those, if any of you have taken the trade because you thought it was a great trade to take, not because I said go into the trade, because I didn't say that, then you've done a lot better than I have. Well done to you. You can see the Dow Jones still selling off, so I'm celebrating my swing trades at the moment, but let's have a look at some more markets. Okay, Aussie dollar. Let me just get a little bit more data. Okay, 365 days should be enough. No, let me give us some. Okay, so Aussie dollar, it's excuse me, it's just selling off at the moment. It would be interesting to see where we can find support on this. We did a trade the other day. We actually tried to get a long position out of it. We have now broken this support level. I mean, potentially we've got strong support over here. So we get my shortcut keys. We've got strong support over here. If you just bear with me, I've just got to take this phone call quickly. It's important. Okay, hey guys, sorry about that. I am back. I've got a few bits and bobs going on. So you can see here, pretty much we have broken this. We have broken this level of support over here. Now, if you look at the chart, you can see here this. There we go. This over here, these tops over here, and then you've got this consolidation pattern over here. Now, if we actually put a line across here, we can see that all of these, that all of this becomes relevant. I don't know if you can see that, and that's quite important to take down. And that's what I see. I don't need to draw this on my chart all the time because otherwise I end up with 1,000 lines. But I can just visibly see that. So you think, okay, well, where are we going to go? So if you actually have a look, we've got this top over here, we've got a triple bottom over here. So that certainly for me becomes relevant. Now it doesn't have to do it. You can see here we just missed it. It doesn't have to do it to the point or to the pip, but it's got to be fairly close. A lot of the time it will do it because that's where people are going to set their buy orders or their sell orders or their stops. So bear in mind. But that's where potentially the Aussie can go. Now, until it gets above the support level here, I wouldn't be looking to put a buy order in. But potentially, at the moment, why fight the trend? The trend is heading down on the Aussie. So that's essentially what I would be looking at. Now, what else have we got? I'll just take us back to my favorite again. And we'll just go through this. So for those guys that are joining us, and also for guys on YouTube and Facebook, thanks for joining in. Just to give you a bit of an update, we had a nice little winner on the NASDAQ, and we'll go through that, but in a second. But basically, you can see we've got this really nice uptrend. Since April last year, and it just continues to go. We try to have what we thought was going to be a correction. It didn't come about, but I personally think, and again, guys, don't take this as advice because I've been, although I've made money consistently on trading futures, day trading the futures, my long-term analysis has been absolutely terrible. And a lot of it, I put down to, the Fed is doing a lot of stimulus at the moment, or was doing a lot of stimulus, and a lot of that means buying into the market. So, but we are seeing, you can see here, we've had this nice uptrend. We thought we had broken the trend here, this little trend line. We tested it, we came back into the cloud, we found support, and we're pretty much sideways. We're struggling to go higher. So whether that's going to be, whether we're going to see the market try and grind lower, it would be interesting. I'd love to see a break or close below the Ichimoku cloud, because that's one of my main indicators that I use. And I have programmed quite a few variations of that indicator. But that's kind of my long-term analysis is, are we going to grind higher and break? I wouldn't be taking any long positions until we get above this high over here. But at the moment, my general synopsis on the market is I feel that there's a correction coming up, but I've got to trade the charts, but the first thing is to get below this high value area here. And if we can get below that, we can test the point of control. This is where your institution are pretty much sitting. That's why you can see that all this consolidation here. Someone asked me in the chat just now about these dashed lines. Now, there's an indicator called TAS boxes. It's one of my favorite indicators. I have three favorite indicators, which is my 80 trigger lines, which is an indicator that we programmed, which is a variation of a MetaTrader 4 indicator. The Ichimoku cloud, which I've been trading with for years, and I use that a lot when I'm trading. I do a lot of options trading. In fact, I used to trade options more than anything else, with mainly US options. I'd use interactive brokers, and I found the TAS boxes with the Ichimoku cloud is just a wonderful combination. So to explain what they are, I don't know if you can. Hopefully you can see this blue line over here, where my arrow's pointing. So that's actually the point of control. So you have the high value area, you have the low value area. Let me just change my You have this low value area, you have the high value area, and you have the point of control. So what it does is it works really on where the volume is going to the market. So the way that it actually works, without putting everything on the chart, is if you take your volume at the bottom of the chart and then you turn it on its side, so it's vertical, then what you'll do is you'll end up with a what you'll do is you'll end up with something that looks like this. And then, if you just bear with me 1 second, I'm going to do a really crude. I haven't got my pen's not working. I like to draw it. So if you've got, for example, you've got your market heading higher and puts in a retracement, kind of goes sideways a little bit, and then you have something like this, right? And then what happens is you have a breakdown. So in other words, the market's going short. So at the bottom here, you might see this. This is kind of your volume, and then you'll start seeing volume spiking up here, right? And eventually it's going to drop off. So what you actually do is, if you turn this onto the side, you're going to see something like this. And then there will be your breaker. So you're kind of taking this volume here, you turn it on its side, and you should get the same representation. What we do is we look at where the volume, where most of the volume is, called volume profile, and we look at where we put lines on where most of the volume is being traded, and that's where your institutions will be looking to get to, or where they're going to get filled. Because if you look at the S&P futures contract, you regularly see contracts that are going through 300 contracts. 300 contracts, I certainly, I would never trade 300 contracts, and those are your institutions. So, they can't look at, if they're watching and they're seeing the bids getting hit, and they want to, offload some positions, they've got to wait to actually get filled. Otherwise, you're going to have too much movement or too much slippage in the market for them. So what they do essentially is you look in where all the volume is being traded, and generally you'll see areas of consolidation. So what I mean by that is, if you look at this, we can see the market's just gone sideways here for a number of days, and then ultimately it has broken out here. And we're going to do some sessions on reading order flow, and we're going to also do some sessions on reading tape. So what we do is we look at the bids and the offers coming into the market. We'll look at the in-between bids and offers. We'll look at whether we're hitting the offer or whether we're hitting the bid, and what that all means, and how to actually gauge your entries, or where you can see whether you're actually starting to run out of steam by watching, for example, the bids taper off, etc. So it's going to be, it's one of my projects that I want to work on, and do a video and a live trading session where we're just pretty much just going to trade order flow and support and resistance levels. So, but ultimately, so the TAS boxes work is if it breaks out of the TAS box. So if we go back to our entry chart over here, so we'll have a look at the trade that we did today, for example. Well, in fact, we'll use the Dow Jones chart. I'll just get rid of this. Just get rid of this retracement. So the way that I'm looking at trading in the room is I look at this. So like I said, if I put it to you this way, the background indicators, this algorithm that prints, this is actually, it's an indicator I had a look at and did a bit of modification, but it actually comes from an auto trader with NinjaTrader, quite an expensive one to purchase. Anyway, we kind of decompiled it and rebuilt and whatnot, and it doesn't read paint, which is the great thing. But you can see here, if it's green, it goes up. If it's red, it goes down. What I keep saying to people, and a lot of people, because we own a website, and we get millions of hits every, what do we, 7-8 million hits a year at the moment, and they always say, well, which indicators do I need to use? So And then they send me a list of all the indicators that they've got, and they've got the awesome oscillator, and then they've got the MACD, and then they've got the CCI, and they've got an RSI, and they've got the stochastic. But you're using stuff that's all the same. You know what I mean? If you're going to use an RSI, what's the point of using the stochastic at the same time? And then loading your chart up with all these indicators. So indicators is about choosing ones that work together that produce a result to make you money. So the way that this works is if this is the TAS box breakout, this is the point of control that I was talking about before. So over here, you've got, this is 1 o'clock London time. You've got the market tries to retrace here. This is actually a break even. You'll take a tiny little loss there. I wouldn't say break in. I personally will take a small loss there because my stop would be sitting about, my stop would actually be over here, just above the point of control. And I'll tell you exactly how I work out my stop. But ultimately, what I want to see is I want to see this. I want to see my background. I want green. This is for a long trade. I want the first or second candle has to be the same color, and this trend paint bar indicator that's some of our code that we've put in together, so the idea behind it is it's an algorithm that runs in the background. I'm not going to go into details because it's ours, but ultimately when it's red it sells off, when it's green it goes long, if it's purple it goes sideways. That's kind of the way that it works. And so what I want these two algorithms, if you put it like that, rather than refer to them as indicators, these two algorithms or indicators, I want that to occur in the first in the first 1 or 2 bars. Now, where I put my stop is I put my stop on the candle before. I put it at a relevant low or a relevant high, depending on, in this case, relevant low. So I'd put the candle before. I'd look for either my stop, an aggressive stop would be sitting there, and a conservative stop would be sitting there. I wouldn't go down here. That's it. That's all you need. Because here you've got your TAS box breakout, you've got your trend indicator and your background indicator all at the same time, and then you've obviously got your 80 triggers far and above. You've got your CCI, and the CCI, I don't really use it, but this is what I call a 5-point trade. So I get 1 point for my trend, 1 point for my background, 1 point for my TAS box breakout because it's the same time. I get a point for my trigger being above the trigger line, kind of, and then I get a point for my CCI being above the 0 line. Where I like to use the CCI more is I like to use the CCI to look at when we're going to run out of steam. So have we still got momentum? If there's really strong momentum, then the CCI it's not going to tell you anything. It's going to give you a false signal if you use it for that purpose. But but generally when the CCI gets to plus 200, minus 200, or really about 230 and minus 230 to 250, we start running out of steam. And I'll show you that now. So here we've got this nice little bullish trend on the 5-minute chart. Comes back, puts in a few retracements. We've got another trend or another TAS box breakout, and then finally your exit point is over here. Okay, so the exit point is because we've now broken below the TAS box breakout. That's completely different it's a contradicting trade. We just get out and we wait for the next trade. We be patient. So when we look at this next trade, so then we go into the short, and this is what we were talking about earlier. We've got this trend line over here, and that's what we're waiting for. This is the break of the trend line. We've got these lower highs over here. It's kind of working into a triangle, and you think of like a spring. It's coiling itself up, and then ultimately it's going to break out, and it's just going to explode. And that's exactly what it's done as anticipated here. So let's look at this trade. How many points have we got? And some of you will be able to see from the chart here. So we've got background 1, we've got our red paint bar indicator 2, we've got a TAS box break at the same time, that's 3. So that's our TAS box break there. We've got our 80 trigger above the trigger line, and that's just a modified version of an MT4 indicator. And we've got the CCI below the 0 line. So that to me is a 5-point trade. Now, obviously, when we break the TAS box, we expect the trend to be a little bit stronger. We expect volume to go in because we've broken below that low value area. It's sold off. It's coming and it's come and retested the low value area, and then we get the trend break. We get that volume. The volume actually comes in here. This isn't the volume indicator, but we get volume coming in here, and this is where we've got to be careful. We've got to now start looking at when we're going to start seeing prints below -200, and you can see it's round about here. So, and like I said, if it's in a strong trend, it's not going to work for us. But and we can see that by this indicator here. But ultimately, we want to start maybe moving our stops up, if that makes sense. So that's pretty much the trade. I'll just take you through. I'll take you through I'll take you through the next 3 trades. So over here again, we've got a 5-point trade. You can see it does move down. And depending on how aggressive you are with the stops, we've got 35,181. We get to a low of 35,171, 10 points. Whether you go stop to 10, great. If you don't go stop to 10 after 10, then you can go break even. Personally, we can't just working. It's so easy to trade in when you look in the past, but when you look at stuff like this. Like I said, our stop is going to be over here. In fact, if aggressively over here, conservative over here, over there. So, and then lastly, the trade before, just to go through, you can see that's a nice winner. I'm sure you can see that's a 5-point, that's a 4-point trade. That's a no trade because we haven't got the TAS box breakout. This is a 4-point trade. We've got another trade here, TAS box break. We don't take that one because it's not the TAS box trade, although it is a 4-point trade. And you can see, but ultimately you've got a winner, a loser, a no trade, a winner, a loser, a winner, and obviously a winner. So you can see it's a great system to trade. And guys, I'm going to leave it there. I'm going to talk more about this tomorrow. I want to show you how this works on the longer time frame charts, because if you think like this is exciting, I could literally, especially in the New York session, I went through about 2 months, and we've got all the results to prove it. Trading micro futures, where I think we had like 1 or 2 losing days. It was phenomenal just trading this exact system, and it's a no-brainer. That's the nice thing. You know where your stop is. You know where your entry is. You pretty much work out where your targets are from your longer time frame charts, which is these here. And I set up all my targets. You can see here, there's my targets if I'm going short. Here's my targets if I'm going long. And once you've done it 100,000, or not 100,000 times, but once you've done it as many times as I have, it becomes almost like second nature. It's like getting in a car. I don't think about where the clutch is or what gear I've got to be in. So I think, look, we had a good session again today. I was profitable, which is great for the session. That's always a win for me. A profitable day is a winning day. But I hope to see you guys. We are looking at doing we had some questions in relation to futures and CFDs. I'm actually looking to move more to CFDs from the futures. I love futures and I love the way they work, but a lot of the people that get in contact with us and come and watch us either on social media channels or contact us through MetaTrader indicators, they're trading CFDs. They don't have the funds to go and put in I think what was Interactive Brokers or $10,000 US minimum. A lot of people don't want to start with that. I don't recommend starting with that. So we will be looking at trading more CFDs as well, and that's because trading currency futures is terrible. It's horrible. Especially when you're trading in sessions where you don't get the volume going through. There's a lot of gaps between price. It's definitely better to go with CFDs. And the other nice thing about CFDs, which I was talking to someone the other day, is I pay a fortune because I've got AMP futures. I pay data fees. I've got Interactive Brokers. I pay data fees. I pay data fees for CME, for CBOT, for NICE. I paid data fees because I've got Eurex as well. I've got LSE as well. I've got the SFE as well. So I pay a fortune in data fees. So if I don't make a profit, I mean, my data fees are going to kill me. The nice thing is when you trade in with CFDs, especially because we're day trading in and out, we're not paying swap rates, is we end up not having to pay the data fees. So that's one of the big advantages. I just wanted to put that out there because it's a question I get asked all the time. Should I sign up with I've got $500, I want to start trading. Should I sign up and do micro futures? The answer, you can do it, but you're going to pay data fees. And if you're trading one contract of micro futures, you've got to trade quite actively. So guys, thanks very much again. If you want to see more or learn more about our site, please go on to tradeonpoint.com. A lot of information. You can sign up for a 90-day trial. We're not charging people. We're just trying to get a bit of a following going here, get a bit of a membership going, and it'll tell you what we do. We've got some trusted brokers on here that we would recommend. We've got a video library, article library. You can contact us, you can contact me. I'll answer every email that comes in. And if you are trading with MetaTrader, best sites in the world, metatradingindicators.com. Best site because we own it, but it has like 2,000 indicators that are free. There's no sign up, there's no spamming you with emails, none of that. You simply go and you click MT4, you go the Donchian channels, for example, the fib levels. It tells you a bit about them, and you can download the file. If you don't know how to install it, go onto the guide to install indicators, and it will actually show you how to install it. So it's a great site, and we are really trying to. We're getting about 7 million views a year at the moment, or 7 million users a year. It's something ridiculous. Yeah, it's something that we're going to be pushing a lot in the future, and that's one of the other reasons we want to try and migrate to MetaTrader. I think that's all for me. I hope you've enjoyed the session, and the whole thing is, just manage your risk. If you're going to continue trading tonight, just watch out for that news coming out, and we hope to see you tomorrow. Until then, guys, have a good night or afternoon or morning wherever you are, and I'll see you tomorrow. Thanks, guys.